Let's get started. So welcome to the Real P&L Trading Show, where I share my P&L on 4 accounts and share my proprietary safe wheel strategy. I share that for free. Let's first make sure you guys give me some comments, make sure my audio is working okay, my video is working okay, everything's going normal. I'd appreciate some feedback on that. Also, be sure to post any questions you might have earlier rather than later in this broadcast. Sometimes people post questions after I'm ending the broadcast because I think we're on about a 2 or 3 or 4 second delay. Okay, so knowing that, let's move on to the earnings edge. All right, you can see my screen right now, and you can see the trades that I've made so far this year in 2025. And the last trade I made was Baidu, and Baidu lost $516. So you can see my other trades have done quite well, made 1,000, 1,000, and 2,300. This one lost 516. So let's take a look at the spreadsheet. Baidu down 516. And since I've done my latest update, which is 2025, which is version 3.0, I'm going to start tracking those numbers. 3 wins, 1 loss. Average win 1465, average loss 516, 75% win rate. And what is my P&L? I'd like to know that. 9741. So let's put in there 9741. And let's put in there what, let's see, 9741. I'll put that in there. And then SPY is trading at 605.61. 605.61. Okay. All right, so you can see here what the results are. 2022 outperformed, 2023 underperformed a little bit, the S&P 500, and 2024 underperformed quite a bit. And now we're in 2025, where the numbers are about 52% in 2025. The market's up 3.4% in 2025, obviously outperforming vastly with the new 3.0. And the thing is here, there is on a risk-adjusted basis, there's a lot more risk than holding the S&P 500. There's a lot more risk in the earnings edge. That's my more risky, higher return program or system. Okay, let's get into the other systems. We have the PL5 Pros, my larger account. Let's see how that one's doing. PL5 Pro account is my 527 account, I believe. Yes. Okay. And this one, 482,341. 482,341. Let's put that in there. 482,341. Down a little bit from last week. 482,341. Okay, so you can see so far in 2025, I started this in the middle of 2024 when I updated the Pro, this new trade plan, the updated trade plan, did 16% from that middle of 2024 where the S&P did 6.65. In 2025, about 2.95%, and the S&P is at 3.43%. So the S&P is outperforming just by a little bit, but this has better risk-adjusted returns. My risk is about half. The drawdowns are about half what the market is with this system, even less, maybe about 1/3, depending on which variant you run. But you can see I'm up 13,832 year to date is what my numbers indicate, because I started with 468,509, now I have 482,341 here. So it's been about, what, 7 weeks? Okay, so that's a PL5 Pro. Let's get into the PL5, just the regular PL5. And for that, I need to log in. I'm going to log in here, authorizing it from IB. And this account I can't completely show you because there's no way to show it to you without sharing my account. So I'm going to just kind of barely bring it in here. You can see my account is 34,311. That's how much is in this account, 34,311. So it's up just a little bit. 34,311 from last week. You could see the PL5 started this account with $30,000 on July 16, 2024. I made $3,000, 10.2% in that approximate 6-month period in 2024. The market did 3.94, so 10.2 versus 3.94. And now year to date 2025, it's $1,245 or 3.77% versus the S&P 3.43%. So overall, the PL5 is up 14.37 versus 7.51. So it's about twice the amount of return of the S&P 500, but this one will draw down with the S&P 500, but it will recover faster. And you can see here the PL5 Pro, I forgot to mention, is up 19.42%, and that's over about a 6 or 7 month, 8-month period. And the S&P 500 is at 10.31% over that same 8-month period, which is really good for the S&P. That's about almost double what it normally does. Okay, let's talk about the Safe Wheel. I pulled my Safe Wheel information. I'll go into that account. As you can see, I have a few accounts. It's this one here, and the net liquidation is 56.27. 56.27. This one struggled last year. 56.27. Not much of a move from last week. In 2022, the Safe Wheel outperformed by about 40%, and then in 2023, it underperformed the S&P by about 20%, and in 2024, it underperformed by 37%. Now remember, I only get about half the drawdowns of the S&P, so on a risk-adjusted basis, you can pretty much double these numbers. So I'm up 2.68% year-to-date in 2025 versus the 3.43 on the S&P 500. So the 2.68, you can pretty much double that on a risk-adjusted basis. So risk-adjusted outperforming, nominally underperforming a little bit this year, year-to-date on the Safe Wheel. So I'm going to go ahead and trade the Safe Wheel now, because I've traded every position live except for the, going here. I buy this long call on Fridays for $5, so you haven't seen me make that trade, but every other trade I've made live in this account. Okay, so I'm going to now take a look at LI and where I am, and look at my hedges and manage the position. So I'm trading LI. It's trading at $25.74, $25.75 approximately. I own 100 shares. So I was assigned at $24. That was probably 3 weeks ago, a month ago. So I've sold covered calls against that, but haven't got called away. Now let's talk about the hedges. I've got my put hedge here. A couple things with my put hedge. I have 3 questions. Number 1 question is, do I own 200 shares? And the answer is no, so I don't do anything. The other question is how many days do I have until this position expires? And it is over 100 days, so I do nothing. And then the other question is this $20, the strike, within 70% of 25, now it's 25.84. Well, let's take a look at that. Let me see if I can pull up my, pull up my calculator here. So 20 divided by 25.84, it's 77%, so nothing to do there. So this put hedge is good. The long call is good. I own a long call that expires at the end of the week, and I paid $6 for it. Okay, so my hedges are good. Now I'm going to run the traditional wheel. So running this here, I own 100 shares. So what I want to do is sell a covered call at the strike price of $24 or better, and I want to get at least 24 cents. So let's take a look at the trade. Let's take a look at the options chain. I'm going to sell everything. There's only 3 days until expiration. Today's Tuesday, not Monday, so I have a little less time, which is okay. So let's see here. I'm going to look at my calls, and I want to look at my calls, and I want to look at the ones that are out of the money, and I want to get at least 24 cents. And I can sell the $27 call and get 26 to 29 cents. I typically like to go back one from where I could do it, so I can collect a little more premium. but I want to make sure I don't get under $24, which I have quite a long ways away to go. So I'm going to sell the 26. Actually, instead of saying that I should have done this out of the money, I should say I need to do this at 24 or above. And I could do it at 26, at $27, but I'm going to come back to 26.50. I'm going to come back one, and I'm going to sell the 26.50. I'm going to do one of these based on my sizing. Mid price is $39. I'm going to sell one, and that filled. So I have this now. So that is my trade: selling a covered call, running the wheel, right? Selling a call against my shares at 26.50. If I get assigned, I'm going to make $250 because my cost basis is at $24. Now, let's look at how much I'm up on the 100 shares. I'm up $182. And of course, I'm down $1 on the long call. And then on my put hedge, I'm down $264, right? So down up 182, down 264. But this doesn't take into account all of the premium that I've collected. ABC, always be collecting. Every week I'm collecting premium. So I just sold some more premium, and I'm going to keep that premium that I just sold, that $39. I'm going to keep that premium, and maybe I'll get assigned. And if I do, that's fine, because I'll make $250 off of my shares. And if I don't get assigned, I'll just continue to wheel with my hedge in place. If LI were to crash, I would make a lot of money. That's the difference between the safe wheel and the wheel. If you run the regular wheel and your stock crashes, you will lose money. If you're running the regular wheel, and let's say that you have your position, your portfolio size for 5 positions, okay, so you've got it allocated, 20% into each position. You know what will eventually happen? Eventually, every one of your positions will be down. Over time, eventually it's going to catch up to you, and all 5 of your positions are going to be down if you're running the wheel. And probably a lot of you have experienced that. Let me know if you've experienced that before in the comments. Just put yes if you've experienced it. All of your positions, you traded the wheel and all of your positions were down. And so you couldn't even sell premium and you're just sitting there stuck. Let me know if that's ever happened to you. So that would be interesting, because that is eventually what happens. At some point, you're going to get caught and you're going to own positions that you don't want. Yep. So less is more says yes. Yep. Yes, yes, yes. That's happened. If you run the wheel, that's what happens. Eventually, you're going to get caught there. Okay, well, let's take a look at some of the comments. Avery's got a like button. Hit that like button. I'd appreciate that. I share my real P&L. I want others to share their P&L. Sometimes I asked somebody the other day to share their P&L, and they did. But they happened to bring it, they shared their P&L all the way back to September, but they happened to not share it from August 5th, which is when the market crashed on a volatility basis and when a lot of option premium sellers got hurt. So this person is a premium seller and claims to trade for a living, and shared their P&L, but did not go back beyond August 5th. And maybe he did well on August 5th, but I don't know why he just went back to September but didn't go all the way past August. Hey, just never know. Rich, good audio. Thanks. Yes, my audio's been working lately. Nicholas says, hey, Carl. Hey, what's up? Less is more says, if you are committed to a particular stock over the long term, for example, Apple, is there an option strategy that can enhance returns? I was running an interesting trade just with Apple. Apple's different, okay? Apple's like, it has a skew to the upside. In other words, the calls cost more than the puts, which you very rarely find that. I haven't checked that in the last few months. It could have changed by now. But for the most part, with Apple and with gold, with silver, there are certain underlyings where calls cost more than puts. So there are certain kind of arbitrage things that you can do that I did a little bit here and there, where you can kind of get some free calls, free long calls. But I'd have to think about it again. It's been a while since I've done it. But there is some different things you can do with Apple, because of the fact is that you can, so you can sell a call and buy a put, right? And it actually will finance that put, because the calls are cost more than the put. So you can actually cover your Apple shares by selling calls and buying puts, because the calls are more expensive than puts. You can't really do that with any other stock that I know of. Just maybe ETFs on gold. I don't know about oil. I haven't looked at that. So Apple has a weird, a different dynamic. That's just my first thought process when you talk about Apple. Will, this year is off to a great start for your accounts. Oh yeah, especially my Earnings Edge account. Earnings Edge account's doing very well. Like I said, what is it, up 50% or something? So yeah. Will says, to add to less is more question, is doing the classical wheel good to use if you're long on a stock like Apple? Traditional wheel. I would say I wouldn't do it with my money, because even though Apple's like a really good stock and it keeps going up no matter what and all that, you just never know what's going to happen. It could go down, and it could be down for 10 years. It could. I mean, will it? More likely, probably not, but it can, and then you're going to be stuck in it. And that's okay. I mean, if that's what you want to do, you want that long-term play, you can do that. But I wouldn't run a traditional wheel on any stock, because you'll get stuck. Even if it's Apple, at some point you're going to get stuck. Well, I'm guessing for Carl, why do anything directional? Exactly. Basically, when you're running the wheel, you are long, right? You can look at the risk graph, and if you run the wheel, you're long, right? So, maybe I can really quickly do this, show you. So if I run this wheel without my longs, it's not really showing it very well, but you can see what my wheel portfolio looks like. I'm not sure that it's showing it very accurately, but you can see that definitely it's a long. So it's just a long play when you play the wheel. And you see the risk graph for the safe wheel looks pretty good this week too. Let's see. I don't know, yeah, something's going off wrong here with my risk graph, so I'm not going to try to play with it right now while I'm live. But unless it's more says yes, when it comes to, have you ever been in the wheel strategy and you have it set up to do different, say 5 different positions, and you're stuck in all 5 of them are down? Yes, that happens. And that's eventually what's going to happen. It might take a year or two. It's going to happen. And Will says it's not really happened to him and the wheel. It's probably because, he said because of my teachings, having a hedge. So you really don't get stuck, right, with a hedge, with the safe wheel. Monarch says, I did the traditional wheel on Rivian a few years ago, and it took almost a year of standing still before I could get out. Yeah. So now you're sitting there, and I see people that are stuck in the wheel today, so it's taken them maybe a year to get stuck, but over that time frame they could have done a lot better. The market vastly outperformed them over that time period. The market was up, I don't know, 26% or something in that time period, and they're sitting there stuck in the wheel strategy and losing money. Or maybe they haven't taken their losses yet, but they're down, and if they want to liquidate, they're going to take a loss. Less is more. Yeah, if you're assigned, but you can't get enough premium on either a covered call or a put, then what? Then you're stuck, and you just sit there, and your money's tied up, and you're not collecting any premium. That's one things I like about the safe wheels. Always ABC, always be collecting. So I'm always collecting premium. Will says, hit the like button and subscribe and hit that notification bell and brush your teeth. and wash behind your ears. Thanks, Will. And Avery says, hit that like button. I appreciate that. You guys would hit the like button. I appreciate it a lot. I share my P&L. I share my portfolio P&L. I divide my portfolios into the actual trade system. So that trade system, that's all you see in that portfolio, and you see the P&L. So you see how that trade system performs. There's no way around it, right? You see my net liquidation, and you see that particular trade system only in that account, and you see the P&L, you see the net liquidation. We're not talking about realized profits and hiding unrealized losses. We're talking about the net liquidation. And Will says, on our President's Day yesterday, if the profit and loss be not true, what other deceits do they endeavor to hide? George Washington. Okay. I don't know how you come up with that stuff. Okay, so in parting, if the P&L is not real, what else are they trying to conceal? I appreciate you guys, and I'll be back next week.